Hey guys, Kunal here, Bulls on Wall Street. As hopefully everybody is having a great start to the year. This market has been gangbusters in so many ways. The NASDAQ had one of the biggest increases in the last decade. This first quarter, I believe the tech market was up a little bit over 20% for the first quarter of the year. As you guys know, that's a gangbusters number. When the actual index is up 20%, that means that most stocks are up, 50 to 100% or more sometimes. And that's some real heat in the market. There's all sorts of stuff going on. But today I want to give you guys a trading lesson on how to trade news. The reason that this is important is that news is the most powerful driver in the stock market. Even though we're technical analysts, we always want to see if we can couple what we know about technicals with some type of fundamental catalyst. What I mean by that is if you just go out and draw some squiggly line on a chart and it goes over that, that's not the type of thing that's going to net you 10, 15, 20% or 50% type moves relatively quickly. Technical analysis in itself is great, and it's what we use as the basis of everything that we do. But when you're talking about those like big movers, right? Stocks that move 20, 30, 40, 50%, 100% in a day, all of those are usually going to have some type of news catalyst out. And so that's something that we really always want to be trading. Beyond that, earnings season is coming up in the next couple weeks. Earnings season kicks off with Alcoa. That's ticker AA. I believe Alcoa is on the 19th. And so once that happens, we're going to be knee deep in news plays every day. And so we want to kind of fine tune this. And I thought today was just a prime time example of what I think is just a perfect piece of PR trading out there, because you had the volume, the range, and you had the hype in AI, right? So the ticker is AI. That was a stock that got hit today by a hit piece from one of those short seller reports. This one was done by Dale Capital. At first, I didn't really think anything of it because AI actually did have a hit piece out a few weeks ago, and it ramped after that. And so, sometimes when the market is in this kind of hype, you never know like what's going to happen. I've seen a lot of these hit pieces kind of reverse, but this was the perfect storm for something to happen today because AI has been trading on like such big volume of late, and it's gone parabolic in the last few days. And so when this piece of news came out, I thought that we really had, a chance to get a little bit of a shred. And, we never really know till we never really know till we see like what's going on. But it's still something like we got to let the price action come in. And so you can see kind of in the morning, this company, Dale Capital, they come in, right? And they say, hey, we sent a letter to AI's auditor and the auditing committee and the SEC to let them know, like, hey, these guys are up to no good, right? They've got some accounting issues. And beyond that, like, I didn't really think anything of it because, Spruce Point had put out a whole host of stuff on AI a few weeks ago, and nothing was really happening. But, at the time, AI was sitting on a lot of support when Spruce Point had put this out. And so, like, you just didn't have the alignment, the best hit pieces. You have the alignment of technicals. Like, you need something going parabolic, and you have to have, right, that epic volume and that mania. And that's usually a catalyst. And so let's take a look and see how you trade these things on a technical basis. I thought that, this was a really interesting opportunity. So like if we go in, right, and we look at AI. So, on March 3rd, this was when, Spruce Point had put in their kind of news piece. It was sitting around over this area. This is the first, second, right, third. And so they're kind of coming in around here. And it did come down a little bit and then just started to drag in. But, it just didn't have that parabolic nature to it just yet. And so what we saw recent is this thing go from 30.20 to 34. And it really started to get jiggy. But when the hit piece came out, I didn't think it was necessarily going to hold, but I had some levels I think were really, really interesting. First of all, yesterday the stock was really bouncing off this 32.50. After this huge day, we had this kind of like inside day, but this 32.50 was really, really holding. And so I always want to draw out some levels in the pre-market that would be big support where there might have been inflection points the day before, and see if we start to nudge around them. Beyond that, I want to look at big picture levels. And so the breakout on AI was right around this, let's just call this $30.50 to $30.75 range, right? So I've drawn that out because that, if you look back, now this is like an hourly chart, right? That's the level where we started to break out previously. So I've got a couple levels already drawn out. And my thinking is like, hey, a lot of times these short reports come out and nothing happens. And oftentimes they'll even reverse and go red to green. So what I want to do is let the price action really tell me if this stock is ready to go. So the first level I want to see is it break under that 32.50 and some change, because that was the 32.20, because that was the bounce spot yesterday. So that'll be the first chink in the armor. And then beyond that, obviously if it could stay under that 30.50 and really build a pattern, then we have a chance for like a monster move. So what starts to happen is like as this thing is starting to really, really build, right? And so I trade on E-Trade. I use TC2000 as my charting platform because this has got like the best of all things. Like you can make this into your command center. I highly recommend getting a secondary charting platform because you can just see all the angles so much more clearly. So as this thing starts to break down, it's under the first level and it's starting to test the major one. What we need for an ORB pattern, an opening range breakdown pattern, is a minimum of 3 sideways candles at the opening range. So the opening range you can see here is right around this kind of 30.50. So it breaks under on the second candle. You see that? It breaks the first range, but that's not enough. You need minimum 3 candles of sideways movement before it takes it out. So what's starting to happen here is like you can see here, like you're tested and you're tested and you're tested and you're tested. And like now you really got this thing going, right? And so like as this starting to break down, right? Like I'm taking this thing down and, I'm trading live in our Discord room. I'm trading live in our Discord room on video, all day. And so I ended up adding this thing right as it broke down. And I ended up getting a little bit under about 30-30 average. And what I want to do is use the VWAP area on this specific pattern to really manage my risk. So I want to put my stop loss right over the VWAP. So I'm risking about 70 cents, right? Now, a lot of times, like we're so used to like, most people only want to risk like 5 cents, 10 cents, whatever. But then all that happens, you get stopped out nonstop and you never end up with like that bigger type of play, right? So the stop loss needs to be where the stop loss needs to be. So on this specific pattern, on news plays that gap down like that, you need minimum 3 candles and the stop loss has to be over the VWAP. And then you got to let this thing play out. And so, I'm using the commons on this. And then what I'll do, like what I've been, practicing of recent, because, Levi in our chat room, Stock Hunter, does our options trading service. And so he's been teaching me all about options and stuff like that. And so one of the things that Levi was mentioning to me is like, hey, when you're doing the commons, which is just the equities, right? I scalp out of these things a lot and pretty aggressively. But he said, a lot of times what you can do to supplement this is, right, grab the puts and you can kind of put a smaller amount of money and get the home run out of it. And I think that becomes, really important. Like, as we're starting to trade into these things, we want to make sure like we're able to kind of capture, right, as much of it, as we can. And, on the equity side of things, like I did okay on it. I ended up shorting at 30.28, covered half at 29.51, quarter at 28.90s, right? And then the rest at about 28 and some change. So I did leave a couple bucks. I left a couple bucks on the table on the equity side. But like what I like to do during these kind of scenarios is come in and also, right, use the same type of opening range breakout or breakdown pattern, but I was doing it in the puts. And so because the stock is just at 30, I just do the puts that are like right at the price, right? They call that, in the money. And so you can see here, like, as you start to build out, right, you're testing this level. And so it's right around about 178. They were a little bit illiquid. Not crazy liquid, but the spread was about 5 to 10 cents. So you got to use a limit order. And the good part about this is, right, like, say you're doing 10 contracts, give or take $2, right? You're only putting a couple $1,000 in, but like you have the chance really to, right, kind of supercharge what you're doing because, I'm also putting in, almost 100 grand on the equity side, and that's why I like to scalp out of those and I can keep some of these also and pad my stats on them. And so you can start to see like as this thing is coming in, I'm scaling out of this stock, but I'm also doing the same thing, on the puts end. And so I end up getting out around 28 and I let the puts ride a little bit longer, but I'm still scaling out, right? A few at a time as it starts to go. And so that's kind of how you can supercharge some of these trades. So moral of the story, opening range breakdown or breakout pattern is great for plays that have news, especially when things are getting frothy. All right. Starting in a couple weeks, it's going to be earnings season. We're going to have tons of news plays out every single day. So what happens is if you get the gap down, you need minimum 3 candles sideways, put a stop over the VWAP, all right? And coincidentally, if you have, a little bit of a different trading style, like you like to trade options or something along that end, then you can use the puts. And, when you're just doing these quick trades, like just get the ones that are, in the money. And, you can scalp around on those. At least that's what I think. Who's got time to sit there and do all the calculations and stuff like that? Like, I don't even put these deltas and gammas and stuff on this. Like, it's get in, shred, get out. That's day trading in a nutshell. But guys, you can repeat this pattern every single day. Feel free to ask me any questions. And guys, you're always more than welcome to join us in our day trading chat room. I'm on Zoom all day. We also have an options trading chat room run by one of my students. His name is Stock Hunter. You can find him on Twitter. He's been kind of teaching me some of this stuff about the puts and calls. It's pretty fun. But we do all of it in our chat room. And you guys are more than welcome to watch me trade live and shred it out when this earnings season comes. Feel free to ask me any questions. Make sure you hit that like button, and I'll see you guys soon. Take care.